Hey everybody, this is Jim at SP500chart.com. It's Sunday afternoon, a little after 2 o'clock here on the East Coast on November 30th, 2014. Before we get into the chart, I just need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Well, to make it easy, I have drawn a box around our trading week. And you can see that we closed about where we opened. As a matter of fact, if we look at the weekly candle, we're going to have to zoom in here. There you go. There's our week. Just up ever so slightly for the week, hence the very small green candle. And that should really not come as any great surprise, because it was a holiday week. We wouldn't expect a lot of volume nor a lot of volatility, and that's exactly how things played out. Now that we know what happened during the week, I'm going to get rid of the box. Well, why won't it delete? Let's try that again. There we go. Guys, you know, we were inside of what appeared to be a fairly narrow green channel. We broke out over the top side of that on last Friday, and then came back underneath this line, came back over it again, broke down under it, over it, under it, over it, and now closed under it. So that's kind of making it look as if, well, maybe this line isn't really doing what it should do, or what we would expect it to do. With that in mind, and with the fact that we are now seeing resistance at pretty much the same level. As a matter of fact, we had drawn this line prior to Friday's half-day session. Maybe we now look at it and say it's something more like that. But we're talking pennies here. We're not talking major market movements. So with this apparently being resistance, I'm going to make a change in our green channel. I'm going to keep the lines green, but I'm going to slide this one here. Then I'm going to delete this lower line. I'm going to clean up a few other things on the chart too while we're at it. We'll keep these last couple guys here. Now let's take a parallel line to this and snap it down here. And now, all of a sudden, instead of having that narrow channel with some anomalies to the upside, now we have a broader channel that is also parallel, that encompasses everything that has taken place over the past 3 weeks. I'm not saying that this is right and the other was wrong. All I'm saying is really this is different, and it is legitimate, I think, is what we had before, and maybe a little bit more so, because it takes this area of resistance up here that we started to encounter around 2070. It takes this into account now. So that's really the only change I'm making on this chart. And really, the case could be made that it is, by and large, cosmetic. I still am holding the 2120 target based upon the inverted head and shoulders pattern that we had that formed throughout the month of October and broke out very late in October. You'll note, however, that this pattern does not have the typical right shoulder. But if you've been with SP500chart.com for very long at all, you'll recall that throughout 2014, and even, I believe, just going by memory, even in 2013, we saw a number of what looked to be developing inverted head and shoulders patterns that broke out before we got a right shoulder that was in proportion to what one would normally expect. And I'm sort of letting the textbook go by the wayside, and based upon the experience of what we had seen in the past, I'm willing to let that what's a good way to put it? If I were otherwise sitting on the fence about whether this was an inverted head and shoulders pattern or not, because of what we've seen 2 or 3 times prior to this pattern, I'm willing to say this looks like another one of those inverted head and shoulders patterns that has very little right shoulder. You'll remember I would call them shoulder, head, and flipper pattern, or a truncated inverted head and shoulders pattern, something to that effect. This pattern points us to 2120. We're at 2068. We got about another 50 points to go. That's not huge. That's 2.5% from where we are today. So it's not like that's going to be any great hurdle. If you'll recall, we did a good job, a very good job, spotting this as a short-term or potentially even an intermediate-term bottom. I feel super good about that. I'll feel better about this whole thing, however, when we hit 2120. And I still think we're going to do it. And as the story has been for the past week, the question has simply been, what path do we take to get there? You can know something is going to happen, but you don't know exactly how it's going to happen. And there are a lot of things in life like that. I could think of even relationships. Maybe you got a friend. You know their relationship is not on solid ground, and you can look, you see all the signs, you see all the movements, you see what's going on, and you know at some point in time there should be an eventual outcome from what we see here. And that's true often in relationships, and sometimes it's true in the chart. Because really, what is a chart? A chart is the relationship between those with profit motives and those with, it's all profit. But it's those who are long versus those who are short. It's bull versus bear. So we see a sign. We see the signs down here that the bears, or the bulls rather, have pretty much thrown in the towel. And we know at that point things probably aren't going to get much worse. If you look at this swoon that we saw back in October, and you look at what took place in the weeks beforehand, and then we go back and look at a long-range chart where we see the swoon that the markets saw in 2008, and then the bottom dropping out in 2009, even though this is 8 to 10 times more severe than what we saw here. I mean, look at that compared to this. That is incredible. And I remind you, we are looking at a logarithmic chart. And the logarithmic chart means that the same vertical distance on this chart, no matter where it is, represents the exact same percent move up or down. So this was huge. This was tiny. But here we had the beginnings of weakness. Then we had the catastrophic failure. Looking at our a 30-minute chart again, or let's look at it on an hour. Here is some weakness, a little recovery, and then the petite catastrophe, the small catastrophe, as bulls bailed out of the market at the wrong time, just like they did back then. They did it again, except for at about 10% of the magnitude of what took place back in 2008 and 2009. All of this to say, the same thing happened, it just looks a little different. It's a different scale, but on a smaller scale, the same thing happened. So, going forward throughout the week, I'm going to just keep 2120 in mind. We're going to keep this channel in mind. We realize fully, we should, that we have potential resistance up here at this blue line, but I don't think that line is going to be as reliable as this one. So, if we blow up over through this blue line, that's a possibility. If we then tag this red line, then great, we've made our target. If we were to possibly blow up through this line, then I frankly would start to get a little concerned that we may be seeing something of a blow-off top. We'll talk about that if and when we get there. Right now, there's no indication that we're in any form of irrational exuberance. We came up strongly off the 1820s to a very quick 200-point gain that took place over about 2.5 weeks, and then for the past 3.5 weeks, we've been going sideways with an upwards bias. And again, I cannot tell you for sure what the path will take, but 2120 is still on the map as measured from this inverted shoulder, head, and flipper pattern. There's the height of the pattern from the neckline to the depth of the head. There's our breakout, and that is our minimum target from this pattern. So guys, I think that's going to be it for the weekly review. You see, there's our week, these 4 days. Essentially a flat week, but maybe it fits into and helps us redefine this channel that we'll see if we stay within this channel. That'll be interesting to see. So look guys, thanks for watching. Thanks for your time and attention, and especially thank you for your support. Take care.